Good morning, MegaWhale team, and welcome back to another video. I hope you're all having a fantastic day. In today's video, we are diving deep into the macro and the short term for the total cryptocurrency market cap, the altcoin market cap, and Bitcoin. We are discussing a few very important levels we need to pay very close attention to moving into the interest rate decision in just under 48 hours. We will also be taking a look at the higher time frame and short term for Bitcoin, going over what we anticipate to be the next moves, how the market will likely respond moving into interest rates and after the interest rate decision, and we'll be touching briefly on what those interest rate decisions will likely be and what we are waiting to find out. We're going to be discussing the interest rate decision itself and of course the upcoming press conference following what will be bullish, what will be bearish, and how will the market likely respond. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can join us on Telegram with the first link down below, getting access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in more of that content, you can join the VIP channel by clicking the pinned comment in the free channel to find out more information. Now, I do want to go ahead and ask one question from all of you guys. Go to the Telegram channel and vote in this poll. If you've been following the channel for a couple of years now, you would know we used to have our webcam in the videos. We turned it off about 6 months ago, just because we were experimenting with, what will work well, what people like to see. And I want to know, do you guys want me to bring the webcam back? Do you think it's easier to watch? Do you get more of a connection with the videos? Do you find it more entertaining? Overall, a lot of people are saying they don't mind, and a lot of people are saying yes. Very few people are saying no, so I'm leaning towards actually bringing the webcam back. But let me know what you think. Let's jump into the content. So taking a look at the 24-hour liquidation data and volume data, we can see here, of course, we're coming into the new week, so volume's coming up. Liquidations are very high indeed, with volume up 35%, 305 billion, liquidations up 56%, 423 million, 116 million long liquidations for Ethereum. Taking a look at Ethereum here, we had a perfect trade in Ethereum, dropping all the way back down into that high time frame support. We discussed this in our Ethereum analysis a few days ago. But 116 million liquidations here for Ethereum, 74 million coming from the rest, including a variety of larger altcoins over here, and 45 million coming from Bitcoin, as Bitcoin does still chop more or less sideways. We'll take a look at that in the video today. The DXY is dropping a little bit downward in anticipation of interest rates. Now, interest rates have mostly been priced in for the risk asset market, but for the DXY, it doesn't really price in the interest rate cuts. We will really see a dramatic move for the DXY when those interest rates do actually drop. So moving over to the S&P 500, the S&P 500 opening massively higher again, massively anticipating interest rate reductions here. A very, very high chance we do see an interest rate reduction. The S&P 500 pushing above 6,600 being the trigger. We are looking 6,700. We are looking 6,800 as potential next targets. So fantastic bullish reaction here for the S&P 500 again. We do expect the S&P 500 to remain bullish, provided this overall uptrend represented by this diagonal trend line holds as support. If we drop below this trend line at any point, we would expect corrections back to 6,250, 6,300. So watching that level very closely. Now, of course, we do have the interest rate data releasing in under 48 hours, and currently the probabilities are 95.9% in favor of a 25 basis point reduction, 4.1% in favor of a 50 basis point reduction. As we know, guys, dropping interest rates from a mechanism perspective is incredibly bullish for the risk asset markets. We can see here, again, falling interest rates results in decreasing debt to service ratios, resulting in cheaper debt. When a debt is cheaper, we can acquire the debt at a lower debt to service ratio to purchase income producing assets and use that income to then acquire more debt. You can also look at available household cash flow increasing as their debt obligations to whether it be long or short-term loans, so short-term debts or long-term debts such as mortgages begin to fall down, begins to decrease as available cash flow increases, which facilitates investing. So we see the asset market rise. And now overall, the risk asset market likes to front run things, and that is why we have seen Bitcoin, particularly, we're looking at the macro scale, has been increasing in value ever since those initial discussions for interest rate reductions all the way back in late November. We have seen an increase, even though we've only seen 1 to 2, I believe 2 interest rate reductions since late November. We have seen the asset actually increase in price nearly 3 to 4 times in value. Again, as an anticipation of events, the market tries to price it in and front run. So there is a small chance that if we do see the interest rate reduce, we see a short-term flash correction. The reason being is because we have priced this news in. So if we come and see the news to be expected, we see a pullback. But the overall expectation on the macro is that if we do see continued reductions in interest rates, the market will continue to perform well on the macro, no matter what happens on the weekly, on the short term, etc., etc. Now, there is one thing we are talking about too, which is going to be the press conference following. This is very important as it sets the premise for price movement over the coming next 4 weeks following this interest rate decision. If we get a bullish tone, the market will rally aggressively or continue to rally aggressively into the next decision. If a bearish tone is set, and a bearish tone will be, for example, they are not looking to drop interest rates again in 2025, this may actually cause the market to pull back, even though interest rates have dropped, because again, the market is a reflection of what is expected at a future date. Now it prices things in. So again, what is bullish for the economy is not always bullish for the market. We have to think about that too. Let's jump over to Bitcoin, guys. A lot to take a look at. Of course, we'll be discussing interest rates a little bit more in regards to the price action. We've given you a little bit of insight into that already. We'll be discussing the macro. I want to talk about these two charts, which I believe are very, very important moving into interest rates, as although they are looking good, we have some very, very major resistances sitting right above us. So let's jump into it. Before we do, sign up to BitGet, BitUnix, and BingX with the exchange links down below. You'll get a lifetime trading fee discount of 15% off all your trading fees. You'll go to support me making this content on a daily basis. And of course, you'll support yourself in your trading journey. Trading on exchanges I use and I trust. You can find out all the links in the description, or head over to Telegram and click the pinned comment. Check it out. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay team, let's get right back into it, starting on the total cryptocurrency and altcoin market cap. So first and foremost, guys, the total altcoin market cap. The altcoin market cap is on the right hand side, and we have seen now a retest of the 2021 top and of course the 2024 top. We can see the rejection here on the weekly actually momentarily creating a new high, a new all-time high, very slightly here by around about, probably a couple billion, if the most, just at around 1.16 trillion, and we have bounced, we have rejected, from that point since. So we're looking at the total altcoin market. For the next leg up for the altcoin market, we need to break through this horizontal resistance. Essentially clearing this level here will put us into price discovery, and we will see a significant surge in bullish volatility. So until we break this point of resistance, we can assume that the market cap, or the total altcoin market now, is at a point of major resistance where rejections are possible and potentially likely, as the RSI is still down sloping. If we look at the macro for the RSI from these prior tops, we can see we are in an overall downtrend, signifying that the momentum is not really there for us to break through this level. Ideally, we want to see positive momentum shifts just prior to breakouts of horizontals or diagonal levels to signify that buyers are ready to push the price up. They have strength, they have control. In terms of the RSI, we don't quite have that, but we are still in an uptrend, so there is a chance that may come at a later date, but we do expect an initial rejection from this point, which we are seeing. Now, whether or not that rejection will continue, or whether or not we will see a price breakthrough, is going to be very much dependent on how the market responds to interest rates. But being at a very critical point means that we are at a pretty high risk situation here, moving into major points of resistance and news at the same time, because generally when that happens, we will see more reactionary and more volatile price action. So pay very close attention to that. Essentially break above this point, expect large continuations upwards that will likely maintain. While we sit under this point, we could see short-term pullbacks. So pay attention to that. The cryptocurrency market, on the other hand, it is looking good, but there is also some worries that we see on this chart. So in terms of the good things we can see, we have bounced from the prior weekly last high, 3.65 trillion. Fantastic. We have cleared the current weekly high at 3.95 trillion. Fantastic. We are currently sitting above it. Fantastic. Negative things. Number one, we need to see how the price is going to maintain through this week of interest rates. Again, if interest rates result and we see the price correct and the weekly closes below this level, what will we have? We will have a bearish divergence. Not only will we have a bearish divergence, we will confirm weekly deviation, and we will likely see pullbacks back into support, establishing again this range low retest. So that is something we need to be aware of. There is potential for that. Again, a lot does rest on interest rates. And number two is that we have seen a respective breakdown here on the RSI, and the RSI is still sitting underneath the uptrend, which is a reflection of this trend line, a representation of the strength during this visible range, signifying that the momentum is still weakening as the price is pushing up, again increasing the potential for pullbacks if we do see any sort of weakness come as a result of a sell the news event through this interest rate decision. So these are things we need to be aware of. We need to understand, but we should also at the same time be optimistic, because the total market cap is clearing these resistances as of right now, and the altcoin market is retesting prior all-time highs. And as we do that, we open up the potential for breakouts, which then send us into price discovery. So that is the assessment for these markets. These are probably the charts I don't think many people are paying attention to. I don't think many people are paying attention to the momentum of the altcoin market and the momentum here for the total market cap. I think a lot of people are probably watching these horizontal levels, but not, contextualizing the strength of the price action moving into them. Let's jump over to the macro for Bitcoin. Now, in yesterday's video, I did discuss that I wanted to take a look at the 4-year cycle, and I do want to actually bring that up today. So let's quickly talk about the 4-year cycle. Now, as you guys know, I think I've shared my opinions in a lot of detail in regards to the 4-year cycle, in regards to cycle trading, mostly just in regards to deterministic approaches to trading. Now, if you haven't heard my full in-depth discussion, and you like philosophical points, and you like, in-depth psychology about trading, I recommend going to our Telegram channel. Check out this post. It was posted on the 5th of September. So scroll back. It is deterministic approaches to trading and why I believe it is an illusion and a trap for new traders. And I think this sums up the 4-year cycle indirectly, and I think I want to leave that for you guys to read, but let's just talk about the 4-year cycle here. So the 4-year cycle is a date range trend. It maps out historical key pivot points in terms of what the overall structure is assumed to be, which is phases of consolidation, phases of pullbacks, and phases of bull runs. At the moment, we are nearing the end, if not already ended, the bull run phase according to the 4-year cycle. The 4-year cycle does not predict that we will see the 4-year cycle continue indefinitely, and therefore every single time we come to the end of a potential 4-year cycle phase, there is always the risk that we do not see the 4-year cycle continue forward. So we shouldn't be looking at this chart and saying we are definitely going to see the 4-year cycle play out, but we should be looking at this chart to understand that these key vertical dates, these key dates, are still going to be important and still likely bring reactions to the market, as now many people are watching them, and the market is nothing but a reflection of a collective sum of individuals deciding to buy or sell at any particular period of time. So if enough people believe in it, we will likely see it come true. It is to some extent a self-fulfilling prophecy in that matter, not in the matter that we will see multi-month downtrends just because of the 4-year cycle saying so, but we could see these particular dates be dates of reactionary price movement. So in terms of the 4-year cycle, there were 2 cycle theories. The negative 2-bar theory predicted a top in August. At the moment, that has played out. We topped at 124,000 in August. We have dropped down to 107,000. We're currently sitting at a price of around 115,000. So the negative 2-bar theory predicted the top in August. Let's just jump back to our 4-year cycle chart. Here it is. That is something we need to pay attention to. If we're taking a look at the traditional 4-year cycle, that predicts a top in October 6th, based on a 1,064-day theory. So regardless of whether or not these come true or not, these dates are of significance, and as we are moving now into October 6th, we need to pay attention to that being a potential pivot point for the price action. Now, here is my spiel on what I think about the 4-year cycle. I don't believe the 4-year cycle will continue indefinitely, but I do believe the key dates the 4-year cycle presents can be points of which do result in reactionary movements for the price action. At the end of the day, the cycle is just a visual understanding, representation of historical price action playing out in similar fashions based on our, I guess, human desire to pattern or to understand everything or explain everything that has happened. It doesn't necessarily mean we are going to see continuations. It is just a representation. It's a diagnostic assessment of what has happened, and therefore we can only extrapolate that to maybe what could happen at best, because there's no data behind this. So when we're looking at trigger points, when we're looking at things that we do have data for, we can look at other things like behavior, we can look at strength, we can look at moving averages. It can give you a better assessment of how the price is behaving. The 4-year cycle doesn't do any of that. It just gives us arbitrary dates, and it tells us the price should move in this direction for this long up until this point, and then when we reach that point, it should move down. So that is what I think about the 4-year cycle. It's something we should pay a little bit of attention to, of course, because it does have historical significance, as we can see here. It has played out twice confirmed. One time we have seen, I guess, half confirmation. We've seen confirmation of the downtrend. We've seen confirmation of consolidation. The uptrend's been more or less confirmed, but the top hasn't been perfectly set in stone. So something we should pay attention to at the least. So let's jump over to Bitcoin's price action. Now, Bitcoin is looking a little bit weak. We've talked about on the weekly chart over here that for Bitcoin to really look strong in the weekly chart, we need to see one thing, and that is going to be a break of 119.5K in the weekly chart. If we don't break 119.5K in the weekly chart, we run the risk of creating lower highs and then corrections downward. That is something to be aware of. In terms of the RSI, we are watching for a break over 62.09. While we remain under 62.09, the potential for corrections do or are remaining intact. That is something to pay attention to. So the weekly chart, 119.5 is the level we're watching. Everything else is slightly noise. Moving over to the short term for Bitcoin. Bitcoin has been uptrending into resistance. Moving to the daily chart, we can see our resistance levels marked out by these horizontal boxes. The most important level Bitcoin will need to break through to turn bullish again is 117.5 to 118,000. That is it. This rally here that we have seen is a rally into resistance, a prior lower high, a point of liquidity, buy side liquidity. If we see interest rates bolster this rally, fantastic. If we see a sell the news event, we could see a lower high print here before we correct back down into support. So for us to see a weekly break of 119.5, we need to see this resistance break. So this is the most pressing resistance. This is the level we need to pay most attention to. Furthermore, when we're looking at something like the VRPV, we can see the VRPV is representing that 118 is resistance. Furthermore, we can see above 118, the VRPV drops off, suggesting that bullish volatility will massively increase as the buyers take complete control of the trend. So when we're looking at a 4-hourly chart, we can see again the uptrend is intact, but the RSI has broken. This is concerning. I am a little bit concerned about this. This increases the potential for two things. Number one, a bit of chop moving into interest rates, or number two, a correction into the uptrend moving into interest rates. Those are really the only two scenarios I see playing out. Of course, even if we see a rally into interest rates, we still rally into resistance, which we'll need to break. So this uptrend is apexing around about the 23rd of September, which is about a week after the interest rate decision. So we're very likely to see the interest rate decision being that of the reactionary event, which is going to determine whether or not we break up and continue or break down and correct, guys. So that is it for today's analysis. I hope you all enjoyed. Make sure to let me know, do you want the webcam back? I'm kind of leaning towards it. I really used to enjoy making the webcam videos. It's like I'm talking to you guys rather than just doing a lecture of analysis. Now, the reason I took it out is because I do believe what I say is significantly more important. I do believe I present some of the most detailed, in-depth analysis here on the market in regards to momentum trading and regards to just overall technical analysis. I like to remain very clear, very unbiased and objective, and I believe taking the webcam out has helped focus on the analysis rather than me as a person. So let me know what you think. I'm happy to bring it back. I do enjoy it, but I do want to have some community input into what I decide to do with that in regards to this channel. So thanks for tuning in. Catch you guys all on Thursday. Thursday's video will be after the interest rate decision, so we'll be discussing all of that then. Look forward to seeing you then. Catch you later. Bye.